Welcome back to the channel. As always, if you copy trading, you are an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to speak today about a stock called IONQ, ticker IONQ, trading at $48, give or take, as the session has not closed yet. And as you can see, the timing here on the chart suggests that this stock could rip quite a bit over the next few days, as it has broken a few days ago this channel right here. But that is not the reason why I'm looking at the stock. It has been on my watch list for quite a while, and I'll explain why I think the coming months provide a series of catalysts and effectively a window to go long. So in terms of what they do, they were seen before as a company that build quantum computers, a space that has actually been performing quite well, albeit quietly, in the financial markets. So, for example, we could have a look here at the ticker QTUM, the Quantum Solutions ETF. And as you can see, it has had a very, very good performance. Actually, it has outperformed the S&P, yet it's not really in the media. Nobody is really talking about it. And these guys are actually taking it a step further. In 2025, the company pivoted to become a quantum platform. So they are positioning the company throughout various verticals. One of them is computing, building processors that are using trapped ions. The other one is networking. So they acquired two different companies to build the quantum internet, the fiber optic and satellite interconnects needed to link those computers together. And third is sensing. So they acquired a couple more companies to build atomic clocks and sensors for GPS denied navigation. So let's connect the dots on that. If we look at the chart, we see that there's a lot of volatility, right? There has been very violent moves in the last few months. And I do think that as this bearish channel comes to an end, we could see one of those coming in the few weeks that are going to take place shortly. So part of that is their roll-up strategy, right? So they have acquired these companies, as I mentioned, that comes with plenty of risk, but it also presents opportunity. In terms of the problem, trapped ions are perfect qubits, but hard to manufacture at scale. The solution is that they acquired Oxford Ionics, gaining electronic qubit control technology. So that allows them to manufacture qubits on standard silicon chips, solving the manufacturing bottleneck. And then around the same time, that's Q2 2025, they acquired another company to connect those chips with light, enabling modular scaling. Then over Q3 2025, where we see this big peak over there, they acquired Vector Atomic and Capella, so two more different companies. And the reason why they did that is to win the Golden Dome, a US government missile defense project that requires quantum sensors and secure comms. And of course, we have seen the Trump administration being very forthcoming about their efforts to maximize, right, the defense capabilities of the country. So this is one of the reasons why I'm choosing to go along this trade. I do believe that the administration is going to carry on with its efforts. So unless the stock falls due to intrinsic reasons, internal reasons, I do see that tailwind going on their behalf. So let's have a look at their business model and financial analysis. In terms of how they operate, they run a land and expand model, right? Transitioning from R&D grants to high value production contracts. So they have system sales, where is the chunk of the revenue. They sell full hardware systems to data centers and labs. They also have defense sensing. So contracts for sensors and satellite communications. And also they do some recurring revenue as well about cloud access via Amazon, Azure, and Google Cloud. So in terms of how their financials have played out, let's go back to uh, their financials and let's have a look at their sheet. So we can see that on a quarterly basis, right, they're hitting 39 million. So that's growth year on year of more than 200% on top line alone. And this is a company that I do believe, if you see how that progression has taken place, is going to continue accelerating because of those reasons. So that confirms that the technology is commercial, not theoretical. Having said that, the EBITDA is negative, right? So we can see here that is mostly a revenue growth story, but that is a strategic choice. And the good news for them is that they actually have $3.5 billion in cash. So they're deliberately burning cash to capture market share and acquire intellectual property before competitors can react. So they're starving the competition. Not a move that is unheard of, right? When you look at this type of technology companies. So in terms of what's next, management has consistently under-promised and over-delivered. Let's have a look at their track record. So when we look at sales, you see constant beats, and some of them really genuinely significant, like the last quarter they beat by 48%. So as mentioned before, the EPS is a different picture, but still we did see some improvement in the last quarter, yet the stock price didn't really go up. So with that, I do think that the market at the moment is not pricing a lot of hype, a lot of valuation perfection at the moment. And that is another point why I think we can see the stock price going up in the next few weeks. So recapping that, we have the Golden Dome, we have a very strong balance sheet, and most importantly, tech mode. So the company, one of their great achievements has been to find the holy grail, if you will, for error connections. So they've acquired 99.99 data accuracy in terms of the quality of their processing. So that sets them apart from everybody else. In terms of risks, they do have, of course, the risk of integration on all the acquisitions that they have performed. So obviously that could be a big move to the downside. But it's early to say whether that is going to show. With these acquisitions, it could happen immediately, or it might take a little bit longer to show. And of course, we have to bear in mind that the high valuation multiples make the stock sensitive to macro rates. So, what's next? What is driving this growth? Well, we have the defense programs of record. So moving on to defense contracts, of course, that makes the revenue base more sticky. The commercial scale up, so selling their solutions rather than just compute time, and tech milestones. So hitting AQ 64 3 months early proves to customer that the roadmap is real and is accelerating bookings. And with the transition to Tempo, which is shipping this year, that provides for increasing computing space by millions of times. So the backlog is growing, and the 3.5 billion war chest ensures that they can fund this growth over the next few years without returning to the capital markets. So that diminishes the risk of dilution here, trying to raise more money, which of course would drop the stock. So in terms of catalyst and what's next, we have to keep an eye for the period of January to March and beyond. So of course, at the moment, there's discussions going on between the Trump administration and NATO. We'll keep an eye for whatever comes out of the Davos meeting that is happening this week. And then as well, their Tempo 100 was achieved on AQ64 early. We'll have to see how tech companies release first light data to build hype. But technical proof that Tempo outperforms classic supercomputers in a specific chemical simulation will be a real impact for the stock. And of course, we have DARPA QBI Stage B funding tranche. So IONQ entered Stage B in November 2025. Quarterly checking is often unlock non-dilutive funding or public validation from DARPA. If that happens, the stock is going to soar, of course. Worth mentioning too that the short interest at the moment for this company is pretty high, is about 22%. So of course, we've seen the risks that could play out. We accept that and we acknowledge them as traders, but that provides another opportunity for the stock to go up massively if good news come up. So with all these things, I have already entered this trade, is already performing well. And the way I've structured this, I bought some contracts, the 50 strike in May, and sold the 20th of Feb 55. So as you can see, that provides us with the short leg expiring before earnings and gives us the opportunity to capture explosive upside after that, unless, of course, any positive news come ahead of that. Hope you enjoyed the video. See you soon.